listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy-Byrne.
Hey, everybody. Hope you had a great Thanksgiving. Welcome back to the Daily Gold Podcast. With me today to wrap up the week and a lot more, he's Robert Sinn, also known as @CEO Technician on Twitter, and you can find him on YouTube @Goldfinger Capital. But I like to call him Goldie. Goldie, it looks like gold, or at least the gold price, is going to close over 2,000 this week. I know you have some thoughts on that, but also lots of thoughts on what happens surrounding that bottom in early October for gold and why that's critical. I'll give you the floor to discuss which of those things you want to start with.
Yeah, thanks for having me back on, Jordan. I really appreciate it. You know, I always enjoy our conversations, sort of talking both the fundamentals and the technicals of gold. So today, at this exact moment, gold futures, the front month, is trading at $2,003 an ounce. So that is officially the first weekly close above 2,000 since more than 6 months ago, since the first week of May, I think. And that was actually the week that gold peaked at nearly 2,100 an ounce. So this is notable because actually, if you look at the weekly chart of gold, gold has been toying with the $2,000 an ounce level for the last 6 weeks. It's moved above it, it's moved back under it, it's moved back above it, it's come back under it, it's dropped all the way down to the 1930s, and it's come back above. But it seems like it is settling out towards the upper end of this range, this sort of like 1940 to 2010, call it, range. So we're right at the upper end of this range, and I think, in my mind, the first weekly close above 2,000 in more than 6 months is a significant achievement, and it's not a bearish achievement. So that's the first thing I'd like to mention and point out. The second thing, as you alluded to, is that going back to early October. And I published a blog on CEO.ca on Thursday night that pointed this out. The chart is there. October 6th, I think that was a really important turning point for gold, maybe for the economy, maybe for financial markets more broadly. It was the morning that the September non-farm payroll, so the employment report data, came out on that morning, October 6th. And the initial data showed a big beat, 336 payrolls versus consensus expectations of 170,000. So that was a very beat by a wide margin. And good news for the U.S. economy, but we would think it's bad news for gold, right? And if you look at the chart, gold had been falling pretty sharply heading into that day, heading into that report. In fact, it was down 9 sessions in a row. And something unexpected happened on that Friday. Gold started trading lower, but then it quickly, reversed back higher and closed up on the day. So that's the sort of key reversal day that technicians really make note of, especially when you put it against the context of, well, they bought the bad news, and that turned out to be a major turning point. And gold has traded up sharply over the subsequent weeks, and still, even to today, gold is still hugging near that $2,000 an ounce level. So quite a bullish change of character there in early October.
Yeah, so we get the as you said, the close over 2,000 this week, and great point made by you about how gold actually bottomed on bad news, or had that bullish reversal on supposed bad news, which was reversed when they tell us, months after the fact, well, the data was actually wrong. It was much worse than whatever we said. I mean, that's becoming a pattern. So not that there has to be a reason why gold is going up, but it is a little, we talked about this beforehand. It is a little tricky right now because we're trying to sniff out what's driving this move in gold. It doesn't seem like there's any clear one thing that's standing out. I mean, the stock market is rebounding pretty nicely. It hasn't really cracked yet. Doesn't look like we're going to have a recession, at least not in the next month or two. Yet gold is as you said, making the weekly close above 2,000. I mean, now it's a couple hairs from an all-time high. So again, not that there has to be a reason for it, but what's your sense of what's driving this move in gold?
Well, yeah. So in the blog post that I alluded to, which you can find on CEO.ca, it's actually the featured post right now. I sort of break down my thoughts and sort of the data right now. And there's a multitude of factors. It's gold, so it's a complicated market. It's a global market. There's a lot of driving forces. But if we sort of simplify it and dumb it down, the number one factor I think we can all point to is central bank buying and this gradual diversification of global trade away from the US dollar. Now, this is gradual. It's not like one day the BRICS countries say de-dollarization and the next month they're de-dollarized. No, it doesn't work like that. These things take years to play out. But gradually, we are seeing more and more global trade move away from the dollar as a settlement currency. Of course, all these commodities are priced in dollars, but the actual transactions between countries can obviously be settled in other currencies. And maybe I don't have the data to prove this, but just my intuition tells me maybe some of that foreign currency is moving into gold. So whatever it is, rupees, rubles, yuan, yen, maybe some of that flow is finding its way into gold as a store of value, as a reserve asset. But maybe the bigger factor, and maybe the biggest one, is the situation facing the US heading into next year and over the coming years, with the combination of a massive national debt exploding. And I don't think that word is an exaggeration. I think 1.7 to 1.8 trillion dollars is exploding. That's a very large number. Annual government deficit. 2023 seems to be a 1.7 trillion deficit. 2024 looks set to be somewhere between 1.8 and 2 trillion. The US is paying for wars in Israel, in Ukraine. There's a lot of government burden taking place here. And, the Fed has sort of won the inflation fight, or so it seems right now. And I think they're going to have to turn their attention to financing Treasury debt. The fact that the US Treasury, as an extension of the US government, has to finance these deficits and roll over the 30 plus trillion dollar debt. And number one, it's not realistic for the government to be able to finance itself at 5% interest rate. So that's the number one factor. Rates can't stay up here for very long. The number two factor is the Fed has to turn its attention to somehow do some sort of, an intervention to support the Treasury. And the combination of all these factors, I mean, we are entering sort of a Nirvana moment for gold. I mean, this is the stuff that gold bugs have talked about for 30 years. This confluence of forces, the US dollar gradually losing its role as the reserve currency, the national debt in the US finally getting to a breaking point above 120% debt to GDP, and then a profligate, you know, administration in Washington that just simply does not know how to stop spending. And in 2024, given that it's an election year, no chance that they're going to run a smaller deficit. In fact, we could probably bet that when it's all said and done, it will come in at the upper end of that range at $2 trillion. So there's my sort of simplified uh, thesis as to what is driving this bullish case for gold.
Sounds pretty good to me as a gold bug and a gold investor. Let's turn to the technicals, because I mean, I don't want to put words in your mouth, but you and I, we've written a lot about the super bullish technicals for gold. But entering a Nirvana just on the fundamental side, to me, that seems to align with the super bullish setup that we have in the charts. I know that it's taken longer to break out than many have expected, but I don't know. To me, it just seems like a really bullish setup with, as you said, entering a Nirvana fundamentally. And then, well, I guess I'm putting words in your mouth with the technicals here, but how do you, not me, but how do you align the fundamentals and the technicals here, Goldie?
Yeah, again, my blog pretty much laid it out, and I'm actually kind of interested in hearing your thoughts about this. So at the end of my post, I put up a monthly chart of gold, and I drew some yellow long rectangles, call them, basically highlighting 2 points of time in the monthly chart. And the first one was summer of 2019. So let's say May, June 2019. And that breakout that occurred in June of 2019, where gold finally busted through the 1370 level, and it proceeded to trade up above 1550 in the next 3 months. So that was a very powerful move from May to September 2019. Gold was at 1275 in May, and it traded above 1550 by early September. And the technical setup, so just look at the indicators I have on the chart. I have the relative strength index, and I have the KST, the no sure thing indicator. And they're very similar places today to where they were in June of 2019. Obviously, it's not exactly the same, but it's close enough that it's very interesting to me, because the 1370 level back in 2016, 2017, 2018 is in many ways similar to the 2080 level in 2020, 2021, 2022, and now 2023. And again, it doesn't repeat exactly. Markets don't do the exact same thing, but sometimes these analogs can come pretty close. And so I wouldn't be surprised if gold makes a move above 2100 in Q1 of next year. So maybe January, maybe February. It seems like it's shaping up towards that. And I'm also interested, Jordan, to hear your thoughts on sentiment, because I look at this weekly close. We're above 2000 on a weekly closing basis for the first time in more than 6 months. And I look at sentiment. I look at some of the sentiment indicators that I watch, and sentiment is mildly bullish. It's not frothy by any stretch. More investors are bullish than bearish, but it's not anywhere near an extreme. And then I look at Twitter, co.ca, and I don't feel any euphoria right now. Now, that could change very quickly, but right now, just given um gold's price action is pretty healthy. I'm not seeing over bullish sentiment that would get me, worried, I guess.
Yeah, I don't see anything in terms of sentiment that should worry anyone really. Um, I think looking at how the gold price has held up really well. Central banks have helped the price, I think, hold up. I mean, they're part of that reason why it's held up well. But I mean, you look at the ETF and the fund flows amongst more. I mean, that's more of a generalist statistic, but you and I know. I mean, that's barely moved. Get and I mean it's and then it's when you consider it's barely moved, and then you consider where the gold price actually is. I mean, you would think with those fund flows, gold would be at like 1750 or 1800. So that's just one angle on sentiment, but I agree with you on that. Yeah, looking at the technicals, I mean this 3-year consolidation / correction has run longer, I think, than most people have thought. But there are some similarities to that consolidation that the 2-year consolidation it did from when it peaked in August 2016 to well, the bottom was in August 2018. So yeah, I mean, I think it took over 2.5 years for it to break out. So I guess it's not that far off as far as a time comparison between 2016 to the 2019 breakout and what we've seen over the last 3 years. So I think that comparison makes sense. Breaking out there in what was it, June or July of 2019, that was breaking out, I think, of a 6-year base.
Yeah,
that was more of a
June 2019. Yep.
Yeah, that was more of a bottoming base, but nevertheless, there's not. I mean, if you look at historical breakouts in gold, there's really not that many. So, but yeah, I think the technical setup is really bullish, and as you said, following the market, anecdotal sentiment and hard data type of sentiment indicators. There's nothing that says the gold market is stretched in any way. So it's it's a really good setup here. I think a lot of gold bugs and gold bulls, maybe they're waiting for some kind of smackdown to come, but gold has, I mean, it's just kind of quietly and steadily, it's been able to recover every sell-off. And, as you said, it's closing above 2000 this week. And I mean, I think the weekly all-time high close is at, I want to say 2028.
Yeah, it is. Yep.
2028. So I got that right. That's less than 1.5%.
1%. Yeah, we're a little more than 1% away from that.
Yeah, and so gold is within a whisker really of making that new all-time high.
Yeah, I mean, I say Q1 because I want to be conservative and I want to give it some room, but it could happen next month. I mean, it really could. We could have a surge here. I mean, and if you look at my post, the seasonality, the final month of the year is a good one for gold. In fact, since 2017, it's been up every time. Maybe that's a little bit of a jinx. Maybe it won't be up, this year, but it's possible. We're knocking on the door, and as we both kind of agree, the sentiment is constructive for a further move up. I think a lot of it hinges on what the Fed is expected to do. I mean, 2 weeks we'll probably get the next employment report because of Thanksgiving. I think they put it off another week. I mean, if that data shows the jobs market is still really strong, which I don't think it is, but if somehow the data shows it is, then maybe, gold will get knocked back for a bit. That's certainly plausible. But I have to think that if somehow the data continues to show this, weakening trend in the U.S. labor market, and we get more, revisions downward to prior months, like we did the last several months, that they've revised every month down. Man, gold could be a cold spring here. I don't want to jinx it, and I don't want to make any crazy prognostication, but I like this setup here. I'll just say I like the setup here in gold.
Yeah, and yeah, I'll make the observation. I'm sure you've looked at the monthly and quarterly charts. I mean, the monthly all-time high close is 2009, but that's the only month that's closed over 2000. So we do have a monthly close coming up at the end of what would that be, next Thursday. So that's a monthly close, but at the as to your point that maybe this thing could break out even before January. You have basically monthly and quarterly resistance at 2000. So that's at the end of the year. End of the year, you get the yearly, quarterly, and monthly close, which is great for chart nerds like us. But yeah, I mean, you get a close at 2025 or 2030 or even 2020. I mean, that could be a monthly and a quarterly breakout at the end of December. So any thoughts on and also the yearly? I think the yearly all-time high close is I want to say it's like 1895, something like that. So I mean, do those closes mean anything to you?
Yeah, they do. I mean, I don't want to add too much emphasis to them, but they do. And maybe, even more important is that one of the big players in the gold futures market are hedge funds and CTAs, right? And so those levels, like if we do get a new monthly closing high here next week, 2030, 2035 or something, let's say that's the monthly close, it gets a bunch of those momentum systems buying more on the trend. They're following the trend. They're buying a breakout on a weekly, monthly closing time frame, and you know that could cause quite an outsized move as well. Again, I would never recommend anybody chase a breakout in gold. Usually chasing strength, unless you're a very nimble trader, is a bad strategy. As a long-term gold investor, the strategy is to actually buy on weakness and accumulate on, big down weeks, down months. But just in talking in terms of the shorter term dynamics here into year end, there could absolutely be a confluence of events that could cause a very big move higher in the final weeks of the year. And so that's something we should definitely be cognizant of. And those weekly, monthly, quarterly closes absolutely matter.
And here's something else that probably matters. It appears that I mean, I try not to follow the news that much because it's horrible, really, whether it's, international news or national or local news. So it looks like there's been a ceasefire and hostages have been released. So maybe tensions are coming down a little bit in the Middle East, at least for now. And, that hasn't impacted gold. You would think on that news, gold would be down like 40 or $50. I mean, what does that tell you about the gold market right now, that it can supposedly hold up or even push higher on potential bad news?
Yeah, that's a great point, Jordan. I mean, if we think back to when this whole thing started, in Gaza in mid-October, or I guess it was early October, and then it really got started as the month wore on, as they rolled tanks into Gaza. But I was always very skeptical of what kind of effect this was having on the gold price. I don't think that a terror attack, even something to the magnitude of what happened in southern Israel, really has any real long-term impact on the gold price. And if it does drive some shorter term trading flows, it's probably just more of the short covering type, where maybe if some terror event happens on a Friday, or traders are worried about, the Israelis might bomb something on a weekend, they might cover some shorts at the end of a session on Friday. But I don't think it really has any long-term bearing. And so, this confrontation between, the confrontation in, Israel and Palestine has been going on for 2 months now. So I think it's all in the gold price, and I don't think that any event like hostages being let go or something is going to really drive the gold price. And so the fact that gold is trading at 2003 and going out basically the highs of the week is not surprising to me. But you're right. Peace, you would think, would be a negative for the gold price, but at this point, I don't think it even matters.
Okay, let's shift gears here and talk about silver, because silver this week is up about 3%. Gold this week is only up about $11, a little more than 0.5%. So, gold has this important close that it's making over 2,000, as we said, within a whisker of breaking out finally. But on a short-term basis, you have silver really leading, at least in the past couple of weeks. I mean, silver's moved from a low, looking here, about 9 or 10 days ago, from a low at $22. It's up at $24.38 now, and it's been leading gold in the last couple of weeks. What do you make of that move? I mean, should we care? Can that tell us anything about gold potentially breaking out, or not really? How do you see it?
I don't like to use silver as a leading indicator for gold. I like to use silver more as a leading indicator for the miners. That's just based upon my experience. I think gold kind of, yes, obviously the two metals have a very strong positive correlation, but gold has its own sort of flavor and silver has its flavor. And I think silver is more of a sentiment tell for the miners than it is for gold itself. But just looking at the silver weekly chart, this close above 24 on a weekly closing basis is definitely positive, no doubt about it. But I'm looking at sort of it's constructed, maybe you could call it a bull flag pattern since May, and we're testing that top rail. Sort of just, you draw a line, the May high, the August high, and then where we're at today's close. It's sort of, we're testing that level. So that's something I'd be really interested to see how silver ends the month. I think that this could be a very important, monthly close for silver. But just again, just from a technical standpoint, silver is making higher lows. Now let's see if we can start making higher highs. So I think silver, you could say, yeah, the bottom is in here. We probably saw a pretty important low there in early October. Now we have to see if it can, if it can break out. And just looking at the weekly chart, the relative strength is right around 50. This could be again, I hate to say it, this could be a coiled spring, heading into year end, but it needs to sort of break out of this bigger picture flag pattern.
All right, sounds good. Goldie, anything else that you want to mention about anything before I let you go? I know we've covered a lot here today, but I don't know. Maybe there's one or two things I forgot to ask you about.
No, I mean, I think we pretty much got to it all. I think that we hit all the key issues, and I think one area where we both play in is in the mining stocks and in the juniors. And this is one of the it's a memorable moment in time for me, because I've never seen the disconnect we have today, between the gold price at $2,000 an ounce and where the junior gold miners are trading at. And so I think that this is going to, resolve itself at some point here over the coming months. And so either it's going to go one of two ways. Either we're going to see a tremendous move higher in gold stocks over the next 3 to 6 months, or we're going to see the gold price just fake us all out and drop back, $200 an ounce or some huge amount. And obviously, you know where I've put my bets on the former, not the latter. But this is a big disconnect, and there's a lot of factors involved in it. But I would have to think that a gold price breakout to new all-time highs would bring with it a very nice rally in the gold miners.
Okay. I have one. I lied. I have one more question. Let me do a quick follow up on that concerning juniors, because some people have said, well, juniors aren't going to move until gold breaks 2,100. I mean, or we need gold at 2,200. I've heard 2,400. I've heard some people say 23.
Making up numbers. Just making up numbers.
Yeah, that's the real secret. But I mean, do you have any opinion on that? I mean, where do you come in on that scale as to when juniors people could be really interested, or money will start coming in and buying the juniors?
I would say, to be completely candid, it has a lot less to do with the gold price and a lot more to do with the price of money and investor risk appetite. So the mistake that we often make, I've made it before too, is we think the gold price is the number one driver of the junior mining sector. No, the junior mining sector is a venture capital sector. It's a risk on sector. In fact, in 2008, when the world was falling apart and the financial system was on its knees, the junior mining sector cratered. It crashed. Gold went up. So even as gold was rising, the juniors were dropping 90% at the same time, right? So we have to sort of break free from that false notion that the junior miners follow the gold price. No, and we've seen it in 2023. We've seen it painfully in 2023, right? The number one driver for the junior mining sector will be Fed rate cuts. So when the Fed waves the white flag, and it won't be the day of the first cut, it will be when Powell telegraphs the first cut is coming. I expect that we will see a very nice week in the junior mining sector. And then, obviously it depends how many rate cuts, the pace of the cuts, yada, yada, yada. I can't tell you the future, but I can tell you that I feel very confident that when the Fed waves the white flag, we will see a lot more bids in the junior mining sector.
All righty. I love it. Goldie, before I let you go, please tell our listeners where they can follow you, how they can subscribe to your work.
Thank you. Yeah, absolutely. So my YouTube channel, I'm getting more active on YouTube at Goldfinger Capital. Please follow. I do a weekly video, usually comes out on a Sunday or Monday. On CEO.ca, I'm at Goldfinger. On X, formerly known as Twitter, I'm at CEO Technician. Don't follow the fake versions of me. There's only one real version, at CEO Technician. There's no underscores. There's no added letters. And I won't send you a private message asking you to join my trading platform. So that's where you can find me. Thanks, Jordan.
All righty, Goldie. Thanks so much. Always enjoy our conversations. And let's do it again the next couple months and see where gold is and if it's broken out yet.
Sounds great.
Thank you for tuning in to the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.